Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, everybody, and welcome to the Finovate podcast. Joining me today, we have Erin Taylor and Annette Brolos, co-founders of Finthropology and authors of Customer-Centric Innovation in Finance. Thank you both for joining me today.
Thanks for inviting us on the show, Greg.
Excellent. So to start, can you give us just a quick overview of yourselves and what Finthropology is all about? Erin, I'll start with you.
Sure, we'd love to. Thank you so much. So I'm actually a reformed academic. I did a PhD in anthropology some years back and worked in academia for a while. During that time, I started doing research on people's financial behaviour in Haiti, specifically on mobile money. And I got interested in just the broader implications of the different kinds of changes that are happening in the financial space all around the world and what that means for different people. And as a result of that, I left academia and a few years ago founded this company, Finthropology, and Annette very quickly came on board with that. Finthropology is a very unique company because we're the only company in the world, as far as I know, that specializes in understanding people's financial behavior that brings together both qualitative and quantitative approaches. And we work for all different kinds of organizations like government, NGO, companies, etc. And we work also both in the global north and the global south. So we cover a wide area.
And I have a completely different background. I trained originally as an economist and worked for many years in financial services in different capacities, but always with strategy and innovation. So the latest work I did there was to bring the Danish financial research and startup environment together. I did an industrial PhD on collaborative innovation, and I was struck by the low use of research in financial companies. And when I met Erin at an European Women Payments Network conference, we started talking about this area, and particularly the space of financial solutions for women, which started our original work on female finance, trying to describe what distinguishes products for women from products for sort of everybody.
Excellent. Well, I think we have a new record here on the podcast, most number of PhDs on the show at once. So congratulations to both of you. Let's go ahead and jump into the book. Again, it's called Customer-Centric Innovation in Finance. It's just been released. Now, of course, we won't be able to cover the whole thing in such a short format here, but in it, you spend a great deal of time examining human behaviors and how they impact the way customers engage with finance and fintech. What prompted you to really examine the fintech ecosystem through that context? And Erin, I'll come to you again.
Sure. So the book is the result of all the research we've been doing over the past 5 years. And when we first founded the company, I noticed that people loved the name of the company. They loved Finthropology, the idea of bringing finance and anthropology together. But I quickly worked out that people didn't have a really good idea of how to generate insights and when you should rely on, let's say, your customer data, or when you might want to use alternative methods like interviews, observations, focus groups, and so on in order to get better insights. And so we set out to write the book to illustrate with real life examples drawn from our research around the world of different cases where we've gone into locations like Brazil, Laos, the Philippines, and so on. And we've used these methods to find out what people are up to. So we have a very rich description of people's lives. And so the book really tries to bring all that out.
And I think for me, having worked in finance for so many years, there were two examples that set me off down this track. And one was the fact that there's a tendency in financial services to work sort of from inside out. So you learn something and you bring it to your customers, rather than to work from outside in, which often it happens in areas such like retail. And the other thing is the fact that working with digital transformation and the extensive use of artificial intelligence is leading to much talk about customer centricity, but very often focused on what is called data-driven innovation, meaning that now we have all this data about our customers, we can provide the perfect individual solution for each customer.
Yeah, well, and I love the focus on kind of the human nature of it, because I think people sometimes forget that finance and fintech are inherently human driven. They're human concerns. And if you forget that there's a real person with real challenges on the other end of whatever technology you're putting together, the bottom line is your technology is not going to be as successful as it could be. It's not going to get the use that it could be. So, with that said, Annette, I'll stay with you. Are there any high level insights you can share, sort of as a preview of what's in the book?
I think we can definitely say that putting all our own findings together with those of other researchers in different areas of finance, we come up with a clear result that if you use only quantitative measures to build your innovations and your solutions for customers, you're likely to overlook why people make the decisions they do and why they use things the way that they do. And you study sort of only what they actually do. So if you look at all the transactions that people are conducting, for instance, in payments, you may overlook what we saw in our studies in Brazil, that people will have a traditional bank and they will have a digital bank. So when they want to withdraw money from an ATM, they will transfer money from their digital bank to their traditional bank, and they'll go and get a withdrawal for free, which they wouldn't be able to get in their digital bank. So that goes to show that if you only look at the transactions, you're not likely to understand why this is actually happening. So go ask people, you will get that understanding.
Yeah, and I think that's a really terrific place to start. Now, obviously, as you would expect from two PhD level academics, you are approaching this from a very scientific standpoint. And that might surprise some people, because we have this conception sometimes that scientific data is different from anthropologic data or even economics data. So can you talk a little bit about the research that you did, what kinds of data you were able to find, and how that data was able to shape your insights?
Absolutely. So I think a really important point to make is that just because qualitative research doesn't use the scientific method per se, doesn't mean it isn't scientific research. You can still go about it in a methodical way, taking great care to choose your research methods, understand what they can show, understand what their limitations are, and so on and so forth. And as I like to say, and we say in the book, qualitative data is also data. It's not just, data isn't just numbers, it's also the things people say. And in fact, if you think about it, all data starts off as qualitative data and gets quantified anyway. So we need to remember that. We have done a lot of research in which we've combined different methods. We have one big project going on at the moment with Western Sydney University in Australia and a couple of other universities that combines economists, anthropologists, and so on and so forth, where we're combining methods. But actually, what I would like to mention at the moment is a different project we did in Brazil that really highlights the value of qualitative methods. In Brazil, we did this study on how people are making payments with a view to understand how they might use a central bank digital currency in the future. So we had to look at what people were doing to extrapolate what they might do. And of course, there is no customer data on how people use CBDCs because it doesn't exist yet. And so what do you do in that circumstance? Well, you have to look very closely at people's lives, how they combine different financial tools, how safe they might feel in public, their attitudes, and so on and so forth. And it's very difficult to get that information from something like a survey, because people tend to give very brief and undetailed answers to these kinds of things because that's how it's designed. So instead, we used interviews. We stood around on the street and watched people making transactions in shops. We watched whether they felt safe waving their money in the air or using their phone in public. And we talked to them about their concerns and about their lives. And so that allowed us to think about how CBDCs would then fit into that context. We actually have a chapter in the book that goes more also into how you might combine this qualitative process into a research design that also brings in customer data to get an even bigger picture.
I love the granular level that you're getting down to there, because I think you're right. If you look at a survey, obviously your choices are limited. There's not a ton of time. How motivated is the person actually filling out the survey to give an honest answer? And then, of course, you have the other problem. What people say they're going to do is not always what they actually end up doing. People lie on surveys, not necessarily intentionally or maliciously, but we have a conception of ourselves sometimes that differs from what we actually do when we're faced with a real world problem that's maybe not fully explained in a survey. So I think getting that level of granular data is so unique. And again, it just speaks to how powerful the book really is. Annette, I'd like to come back to you. Where do you think fintech frequently gets things wrong when it comes to understanding how people in the real world actually use financial products?
Well, I think that there's still a lot of financial institutions looking to understand how technology is developing and seeing technology as an innovation driver. And of course, that is part of the story. But then in the end, what it is all about is actually developing solutions that will serve your customers. So you might do better, go and ask people what they actually feel they need, or rather not what kind of horse they'd like, but rather what problems their experiences, and then use technology to come up with ideas of how to solve them. So a main problem is probably that many companies don't see this as a way of working, as a natural way of working for a financial institution. So they might bring in customers to do testing of existing products. But once you have developed the solution, people are not likely to go back and tell you what they would rather have. They will tell you that this is okay, and they will not be able to tell you whether they would use it or not, I think. And I think there's actually a tendency to underestimate large groups of customers in this area and to think that their financial literacy is too low, that they're not able to understand the solutions that you bring out. So it should be simple and helpful. And what we repeatedly find in our studies is that people are likely to adopt any solution that will help them solve a problem, that will help them pay faster, share bills in an easy way with other groups, or even the fact that you can use NFC to pay in the underground, not having to stop to buy a ticket and then stop your conversation with the people that you're following, is anything that helps you quickly will be adopted. And we consistently find that people are quite good at doing this. Like one of the women we asked in Switzerland about how they used to pay, where she said, well, I once got out of the house and I forgot my wallet. So I had to set up a new wallet on my phone to be able to pay in the shop where I wanted a drink. So people are likely to do new things, even if they don't have the background for them. And on a different note, that actually probably means that we should define and measure financial literacy differently.
Yeah, well, and certainly what you're talking about here is very difficult to do, right? And I think this is why it's so hard for innovators to kind of wrap their heads around this type of concept. The idea that you have to really look outside of the constraints of what the current model allows you to do, what the current products are doing, and think really critically about what the universe could look like, how you could potentially solve all those problems. It's obviously not easy, but we had a guest on the show a couple of weeks ago who was talking about the fact that there aren't that many new financial products, that a lot of fintech solutions are actually just delivery mechanisms, changing the way that you can access your credit card or your checking account. But the fundamental basics of a credit card or a checking account haven't really changed that much. And so that's a perfect illustration of this point. That was Rodney, by the way, Solo Funds, for people who want to go and check out the episode. But I think what you're talking about really speaks to that you have this situation where you really have to get outside of these constraints and think really critically. So I'll ask this question: what kind of transformation do you think is required to get people on the fintech side, the kind of innovation side of the equilibrium, to think more about human behaviors, to look at this kind of bigger picture problem as they innovate? Because obviously that's some very important work that needs to be done.
Well, I mean, I guess the first thing is hopefully that they will read our book and realize how important it is.
Yeah, start there, get the book.
Then in terms of practical moves, companies need to think about building the right teams with the right expertise. And an important point that gets forgotten is you need to plan for qualitative research. So even though it doesn't have to be very expensive, it doesn't even have to take that much time. We've done studies that have taken 2 weeks of research or 5 weeks of research. You do need to do it at the right time. You can't wait until you're a week away from launching your new product and then go, oh, wait, let's do some qualitative interviews to make sure we've done this right. You need to plan it earlier on in the process.
And adding to that, I would say that having the experience of doing just a simple project and seeing the results that it can bring will probably create an aha experience. And if that happens at the right level, I think that people will be more likely to move into this sphere, because I'm certain that there will be employees around the companies that are actually interested in doing this. We have seen some fintechs actually focused on solving customer issues, like they start their company because they have experienced a problem in their current bank or their current insurance company, or they have friends that have experienced the same and they want to solve it, and they set out to do that. They may not know the customers, and they may not be able to solve all the connections and integrations with the compliance solutions, but they will perhaps be able to add new perspectives. So we have seen a number of companies, for instance, trying to build different savings solutions. It's rather boring to have a savings account and be told that if you leave your money there for 3 years, you'll have 3% in interest. And what 3% of? Not very much. That's not very much. So the idea, instead perhaps of posting a picture of your dog or your next holiday or your house that you want to build with your family, that might provide a better framing for actually getting into savings as a bit of a game. And there are companies doing things like that. And we hope there will be more solutions building on knowledge like that. And like Erin says, we actually added a practical chapter to the book, trying to find out ways of getting started. What can you do? What resources do you already have in-house? And where can you find somebody to help you? And I think that actually we might find that working with open innovation and open APIs in larger settings might be a push in that direction.
Fascinating. We have time for one more question, and I'd just like to quickly get your thoughts. Were there any areas that genuinely surprised you as you're putting the book together? Obviously, don't give the whole book away, but I'm always curious to hear where authors kind of have their own previous conceptions challenged as they go into a deep dive like the one that you've done. So anything that was that you'd highlight here as a genuine surprise?
Well, for my part, it was actually the fact that we seem to be onto something that should interest more people here. I kept looking out for the report or the book or the article that would prove us wrong, to show that this is already widely done. And I was a bit surprised that it shows that there's still much work to be done in this space.
Yeah, cool. Well, Erin, anything to add there, or?
Yeah, absolutely. I think what struck me is something that I kind of knew before we started researching the book, but hadn't quite realized was so strong, which is the immense lack of collaborations between qualitative and quantitative researchers of different kinds in the financial space. And for me, especially, the lack of collaborations between anthropologists and economists stands out, because to me it seems logical that people from those two disciplines would be able to come together very nicely to illustrate financial behaviour, especially given the history of behavioural economics and what that's contributed to our knowledge, right? And it always seems to me that there's like a battlefield between the fields of anthropology and economics, but nobody's fighting. They're sitting at their own ends, having a picnic, enjoying themselves, but they're not coming together. And I would like to see that change.
Yeah, absolutely. I mean, the number of times that economists get things fundamentally wrong about how human behavior is likely to unfold is, well, we're not going to go into it here because we're at the end of the episode, but I completely agree. Again, I've been talking with Erin Taylor and Annette Brolos, authors of Customer-Centric Innovation in Finance. The book is out now. I would encourage any of you to take a look. It's a great read. And thank to both of you for joining me today.
Thank you so much for having us.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.